Hey everyone, welcome back to Corporate Decoder. Today, Inflection Point Acquisition Corp VIA just filed its Form 8K announcing a major business combination, and I'm seeing a few interesting details about how this deal will shake out. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing details a SPAC merger with Quantum Space LLC, and it outlines the complex steps involved in bringing these two companies together. One key thing to watch is how they structure the new company and the value they are placing on it. So, on the 8th of June 2026, Inflection Point Acquisition Corp, the FI, which is a SPAC, entered into a really significant agreement to combine with a company called Quantum Space LLC. This is a big deal because it essentially means the SPAC is going to merge with Quantum Space and a new combined company will be formed. Think of it like two trains merging onto a single track, and the goal is to create a bigger, better train. This is what they call a business combination agreement. It lays out all the terms and conditions for this merger. The combined company is going to be valued at about $1.2 billion. That is a substantial number. And after the deal is done, the new company will operate under something called an Up-C structure. This is a bit technical, but basically it means that Quantum Space, its assets and its business operations will be held at a lower level within the corporate structure, while the publicly traded company will be at the top. This setup is often used to allow the original owners of Quantum Space to maintain some control over the business while still being part of a public company. And get this, the plan is for PubCo, which is a subsidiary of the SPAC, to actually change its name to Quantum Space Inc. once the deal is closed, so Quantum Space is really the name of the game here. Before all this happens, Inflection Point Acquisition Corp via itself needs to make a change. It is currently registered in the Cayman Islands, but it plans to move its headquarters and become a Delaware corporation. This is a pretty common move for SPACs. As Delaware is a popular state for incorporating businesses in the US, it is like moving your official address to a more business-friendly location. Now, let's talk about what kind of shares Inflection Point has. They have units which are packages of one ordinary share and part of a warrant. They also have Class A ordinary shares. And then there are the warrants themselves, which give you the right to buy a share later at a set price. The company's shares are traded on the Nasdaq Stock Market LLC, which is a major US stock exchange. Inflection Point is also an emerging growth company. This means it gets some benefits, like being able to delay adopting new accounting rules. It is a way for newer, smaller public companies to ease into the regulatory environment. Let's dive deeper into the combination itself. It is a pretty complex process. First, Inflection Point will become a Delaware company. Then its shares and warrants will be converted into new shares and warrants of the domesticated company. After that, Quantum Space will do something called a recapitalization, which is basically restructuring its own equity before the big merger. Each of the SPAC's units will then be converted into shares of the new company's stock and new warrants. The recapitalization of Quantum Space is important because it sets the stage for how its owners will be compensated. They are converting their existing units into common units of Quantum Space. This is like consolidating all the different pieces of ownership into a standard unit type right before the exchange happens. Then comes the real exchange. Quantum Space and PubCo will enter into an operating agreement that sets up that Up-C structure we talked about. PubCo will also file its own charter, which defines the rights of different types of stock. There will be Class A -1 and Class A -2 common stock, with a -2 having more votes per S share. But these have no economic rights, only voting power. This is a way to keep control with certain shareholders while not giving them a cut of the profits. After all the preparation, a subsidiary of PubCo called MergerSub will merge with Inflection Point. Inflection Point will then become a subsidiary of PubCo. In this merger, the shares of Inflection Point will be converted into shares of the new company's Class A -1 common stock. The warrants will also be converted into new warrants for the new company's stock. Following the merger, things get really interesting with the transfers. The original owners of Quantum Space, called sellers, will contribute their Quantum Space common units to the new company, New Quantum Space. They'll receive shares of New Quantum Space's common stock in return. Some sellers will contribute all their units, while others, called Up-C sellers, will only contribute part of their units, keeping the rest. This is where that Up-C structure really takes shape. Also, these pre-funded PIPE investors are contributing their preferred units for shares of New Quantum Space's series of preferred stock, and they're also getting warrants. Then there is the PIPE investment. This stands for Private Investment in Public Equity. These are investors who are buying shares in the company right before or as it becomes public through the SPAC merger. They are buying New Quantum Space convertible preferred stock and warrants. This means they are effectively pre-buying a stake in the newly combined company. The SPAC itself is also raising funds through this, which is crucial for the deal to go through and to ensure the company has enough capital to operate. The total value being exchanged for Quantum Space is set at $600 million. This is a key number. It is based on a redemption price related to the SPAC's original shares. A significant part of this is the stock that Quantum Space's owners will receive. The paired non-economic voting shares, the Class B common stock, don't count towards this main consideration, which is a common tactic to maintain voting control. Looking at governance, the board of directors of the new Quantum Space will have 7 members. Inflection Point gets to appoint one person to the board, likely someone with a background in public markets or SPACs. The remaining 6 directors will be chosen by Quantum Space. This shows that Quantum Space is going to have the majority control over the future direction of the company. Now, for the deal to actually happen, there are a lot of conditions that need to be met. Both sides need to get necessary approvals, like from shareholders and regulators. The registration statement for the new stock needs to be approved by the SEC, and the new stock has to be approved for listing on Nasdaq. Quantum Space also needs to make sure that there is enough cash available from the SEC's trust account and the PIPE investment to meet a minimum of $90 million. This is a critical threshold to ensure the combined company has sufficient working capital. For Inflection Point, they need to make sure Quantum Space has everything lined up, including getting all required member approvals. If any of these conditions are not met, the deal could fall apart. The agreement can be terminated under certain circumstances. For example, if the boards of directors of either company change their recommendation to shareholders, or if the deal doesn't close within a year. This gives both parties an exit if things go sideways. The SPAC sponsor, which is Inflection Point Holdings LLC, has signed a sponsor support agreement. This means they've agreed to vote their shares in favor of the deal. They've also agreed not to sell their shares for a certain period after the merger. This is standard practice to show commitment and prevent immediate selling pressure on the stock. They are also waiving certain anti-dilution rights, which is a bit of a concession. Similarly, key holders of Quantum Space's equity have signed a member support agreement. They've agreed to vote for the deal and not to sell their shares until after the closing, with some exceptions. This ensures that the major shareholders are aligned and committed to the transaction. There are also lock-up agreements. The sponsor and certain Quantum Space equity holders have agreed not to sell their shares for a period of 6 months after the closing. This is to prevent a flood of shares hitting the market right after the merger, which could depress the stock price. There are some exceptions for transfers to affiliates or family members. An amended and restated registration rights agreement is also being put in place. This document gives certain shareholders, like the sponsor and PIPE investors, the right to have their shares registered with the SEC, allowing them to be sold more easily in the public market. Now, let's talk about the money coming in through these series of SPAs, or securities purchase agreements. Series of preferred stock investors are buying about $240 million worth of new stock and warrants in Quantum Space. This is a significant PIPE investment. The series of preferred stock has some interesting features. It pays a 12% dividend if paid in kind, meaning with more stock, or 10% if paid in cash. It also has liquidation preferences, meaning these shareholders get paid back before common shareholders in case of a liquidation. The dividends on this preferred stock are set to compound semi-annually. This means the dividend itself can earn dividends, which can really boost the return over time for these investors. Regarding liquidation preferences, holders of this series of preferred stock are entitled to receive their investment back, plus accrued dividends, before anyone else gets paid if the company is sold or wound down. This provides a layer of security for these investors. On voting, the series of preferred stock votes alongside the common stock, but they have a significant say through their protective provisions. These protective provisions are crucial. For as long as a certain percentage of the series of preferred stock is outstanding, the company can't take major actions, like liquidating, amending its charter in a way that hurts the preferred stock, or taking on significant debt without the approval of the holders of more than 50% of the series of preferred stock. This gives these investors considerable influence over the company's strategic decisions. Each share of series of preferred stock can be converted into Class A-1 common stock. The initial conversion price is $12. This price can be adjusted downwards if the stock price falls, which is an anti-dilution for the preferred shareholders. There is also a special adjustment if the average stock price over 20 days after 6 months from closing is below the conversion price. In that case, the conversion price can be adjusted down to as low as $7. This is a strong incentive for the company to perform well and keep its stock price up. These series of preferred stockholders also have put rights. This means they can demand that the company buy back their shares after 5 years from the closing at their accrued value. This is another way they can get their money back if the company is not performing as expected. On the flip side, New Quantum Space also has call rights on this preferred stock. They can choose to redeem these shares back starting at a premium after 3 years. So after 3 years, they can buy them back at 120% of the accrued value, and after 5 years at 100%. This gives the company flexibility to remove these preferred shares from its capital structure. The investors in the series of preferred stock also get warrants. These warrants are exercisable right away and expire 5 years from the closing date. They are initially exercisable at $12. Per share, these are common in these types of deals, often used to sweeten the pot for investors. In addition to the Series A investment, there was also a Series B investment where certain pre-funded PIPE investors put in about $60 million for Series B convertible preferred units and warrants. These Series B units also have a conversion price of $12. When the deal closes, these Series B units will be converted into the series of preferred stock of the new company, and the Series B warrants will become warrants for Class A-1 common stock. This is essentially another layer of investment that feeds into the series of preferred stock structure of the new entity. The shares issued in these Series A and Series B investments were not registered under the Securities Act. This is allowed because they are being sold to accredited investors in private placements, which are exempt from most registration requirements. This part of the filing mostly reiterates what we've already covered about the Series B investment by the pre-funded PIPE investors. It just confirms the details of those units and warrants and how they will convert into the new company's securities. As with most filings, there is a pretty extensive section on forward-looking statements. This is basically a disclaimer saying that many of the statements made are predictions about the future, and actual results could be different. They list a whole host of risks and uncertainties, from regulatory approvals and shareholder votes to the performance of Quantum Space's satellite systems and potential launch failures. This is standard legal language, but it highlights that the future of this combined company is not guaranteed. They mention risks related to satellite performance, launch delays, and handling of dangerous chemicals, which gives us a glimpse into the operations of Quantum Space. This next part talks about what happens next for shareholders of Inflection Point. They will be asked to vote on this business combination. A proxy statement and prospectus will be filed with the SEC, which will contain all the details shareholders need to make an informed decision. They strongly advise investors to read these documents carefully when they become available. This section identifies who might be considered participants in soliciting shareholder votes for the merger. This includes the directors and officers of Inflection Point and Quantum Space. It is a disclosure requirement to ensure transparency in the voting process. And finally, there is a disclaimer that this communication is for informational purposes only and is not an offer to sell or buy securities. They are very careful to state that this is not a prospectus and that no securities should be offered without proper registration or exemptions. In my opinion, this filing paints a picture of a complex SPAC merger where Quantum Space is clearly the driving force behind the combined entity. The structure with its multiple classes of stock and preferred securities suggests a desire by Quantum Space's existing stakeholders to maintain significant control and financial upside. The series of preferred stock with its high dividend rate and strong protective provisions indicates that these investors demanded significant assurances and potential returns, given the inherent risks in Quantum Space's business, which appears to be related to space technology or satellites, given the mentions of satellite systems and launches. The amount of cash required for the deal, $90 million, is a critical hurdle. If they don't hit that minimum cash condition from redemptions and the PIPE, the deal could be off. A historical comparable would be some of the SPACs that fell apart in 2022 and 2023, when market conditions tightened and cash requirements could not be met. Those deals often saw significant drops in the SPAC's share price as deal uncertainty grew. My biggest concern here is the complexity of the capital structure being put in place. While it is designed to reward different parties, it can sometimes lead to misaligned incentives and make it harder for common shareholders to understand their true stake and potential upside. The success of this venture will heavily depend on Quantum Space's ability to execute its business plan, especially given the mention of satellite system performance and launch risks. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you like this breakdown, make sure to subscribe and hit that like button. You can also join our Discord community for more real-time insights. It is linked in the description.